Hey, this is Stocks Pilgrim, and you're watching Disney Channel. You're watching beginner's technical analysis, the very basics. If you are not a beginner or someone looking to rebuild their foundation on the technical analysis side, I might still be able to help you grow as a trader. Go to stockspilgrim.com. You'll notice that I have a Discord and Telegram, of course, where I post my trades in real time, my entries and exits, as well as being on voice calls in the morning where I share my screen and my thought process and my approach to the market. A lot of people learn that way. I also teach lessons. In the Discord, you have a ton of educational resources as well as tools for your trading. And then same thing, I have the Telegram if you do not use Discord, where I post my charts and give my feedback or my thoughts throughout the day. And the people in there are amazing. The people in the group chat of this Telegram, they are absolutely amazing. So yeah, we are really working and growing, and I'm very excited to be able to do that. But one thing that inspired me to do the beginners video here is that I constantly have people message me and say, you know what? I see your posts on Twitter, I see your thoughts on Twitter, and I have no idea what you're talking about. I'm brand new at this, and that sounds like a foreign language to me. So knowing that, I thought about this for a while. Knowing that, I decided, okay, let's break this down in a way where I was once a brand new trader and I'm trying to recall all the things that I had to learn, and it's very difficult. So I got a ton of suggestions, a ton of ideas from you guys, and here we are. So I appreciate all the help and the thought process that went into creating something that would be beneficial for people who are brand new. Okay. Now, what is technical analysis? I'm going to give you a very basic, a very simple answer, and we'll build on that foundation, build on that concept, right? So I like to answer that question with a question first, which is, does history repeat itself? Will history repeat itself? Can history repeat itself, right? And the answer is, to some degree, yes. And that's a lot of what technical analysis is. It's the framework where we study the price movement on a chart, and then that historical price movement should maybe tell us the potential price movement. It's human psychology on a graph. Okay, so you're not looking at random numbers. There is a degree of randomness, otherwise everyone would be rich. We would know exactly what's going to happen next. But there's a lot of factors in the market. You need to have a solid foundation. The last thing I'll say before we officially start is, if you have not already, like if you're watching this video, hopefully you've already gone to the beginner trading roadmap, stockspilgrim.com/roadmaps. I'll put a link in the description also. But you need to go through all of these first. If you don't have all this down, it's going to be a lot more difficult to grasp this. Step 6 had a checklist. By the time we're done here with this video, you'll be able to check all of these off. You can already check this one off. I believe Scott Pilgrim vs. the World is the greatest movie ever made, because it is. And even if you haven't seen it, you should check that off, because trust me, dude. Okay? Now, technical analysis itself, you'll probably hear me use it interchangeably with the phrases TA or charting. Okay? Same thing, no difference, no nuance, just interchangeable phrases depending on how I feel at the moment. Okay? Now, I want you to think of yourself as a technical analyst, not just a trader, not just as someone looking at a chart. I think that a lot of capability comes from owning something. What I mean by that is, if you can assign yourself that title, that role now, psychologically speaking, I think you develop a certain level of confidence that you need to have to excel at this, to improve at this. So start calling yourself, start thinking of yourself as a technical analyst, even if you're not great at it, even if you're just starting. Okay? Own that. Make your mind respect the fact that you are putting the time and the effort into it. Even when you're not actively trading, mentally, there needs to be something that links you to this. Okay. Now, we're going to start at the very, very basics. And I think some pieces I might expand on a little bit more. And it's okay if you don't understand it. Focus on the checklist more so. And if you pick up some extra information, great. To begin, you need a platform that you can use and feel comfortable using. I think there's a significant advantage for those that are using a dedicated platform like TrendSpider or TradingView because they were created for this purpose, right? They have all the tools necessary. I think tools maybe that your broker doesn't have. I use TD Ameritrade and E-Trade, right? I have those brokers. I've charted through them when I have to. I also have Webull, like you guys usually see in the mornings. And tools just aren't the same. Webull is probably the best in terms of something that you could use that's also a broker. So give them a try. Find one that you really like. I just wanted to say a note there, and you don't have to use my code. There's all kinds of discounts out there for TrendSpider. I've also used TradingView, not as much experience with it. All right, so let's begin with time frames. Hopefully you guys are taking notes. Oh, wow, I didn't realize I had this annotated so much. Let's run away from that one. So on the monthly time frame, as you can see, we got a lot of information, but not as much information as going into the weekly chart, right? And if we wanted to zoom in, we would go into the daily chart. Look at that. We get more information. The information doesn't change. There's just more of it. With more information comes the ability to make more informed decisions, potentially. You got the 4 hours and the 2 hours time frame. The further in you go, the more information you're going to have. That might seem like common sense, but trust me, a lot of traders are not really aware of what time frame that they're on. You need to make sure you're aware of what time frame you're using. The ones that I use the most, it varies by situation. So don't think there's a one size fits all approach for anything in trading, actually, or for most things, I should say. And definitely not for getting information. Okay, there's information to be had on each time frame. If it's intraday and I'm just monitoring something that's happening during the day and I want to, let's say I'm in a position at the time, the 5-minute time frame is my standard. That's my go-to. That's the day trader's time frame. Okay. If I was a momentum scalper like I used to be, then the 1-minute time frame, which is very frantic, you can easily make a mistake by being on the 1-minute time frame thinking. For instance, I've seen people send me a screenshot of a chart and say, it'll be like here, and they'll say, oh, this is going down. I'll look at it and I say, the 1-minute time frame. Are you kidding me, dude? Like, what's wrong with you? You zoom out to the 5-minute, you realize, oh, maybe I was looking at this prematurely. I need a fuller picture. So it really depends on what your goals are. I use the 5-minute, and then I'll also use the 10-minute at times, sometimes for confirmation. But just as an aside, you need to make sure you're aware of what time frame you're working from. We'll use a few different ones today. I also, when I post my trade ideas, I have the daily chart pretty much every time, because as a day trader, I kind of want to know what the recent price action is, as well as what the previous day's price action was, or what the prices looked like. And this is where you usually find me. Okay. I know the question about indicators will happen eventually, but we're going to skip that for the time being, and we're going to move straight into candles, just for you. Candlestick pattern guide sheet. This is pretty easy. Okay, and you probably already know some of this stuff, and if you don't, no sweat, because without learning this, how could you know? I'm going to find a corresponding candle, and I actually won't even teach from the image I posted. But let's talk about the anatomy of a candle. All right, we're going to look at just one candle right now. I want you to focus on one, and I'll highlight it just so that you can stay focused. Okay, I like this one. That is a pretty nice looking candle right there. All right. The anatomy of the candle is pretty simple. Okay. you're going to have, I'm not going to draw prices. I'm just going to have the little line here so you can see it. Number one, you're going to have your high price. Actually, I'll do this way. We'll mark these. It'll have the price, but you don't have to pay attention to it. The top of the wick, that is the high price of the candle. It means that when this candle was forming, this is the highest price that it went to. In this case, it's 267.41. We know this is the daily candle, so we know that on this day, this was the highest price that it reached. You probably already figured out that the wick at the bottom is the lowest price. That's the low price of the day. It means that on this day, when the candle closed, meaning that was the end of the candle, that was the lowest price that the stock had reached. These are called the wicks. Now we'll talk about the candle body. The opening price of a green candle is at the bottom of the body of the candle. And I can actually increase that a little bit. There you go. You don't have to worry about the price right now. It doesn't matter. Okay. This is the opening price. And you have probably already figured out that this, the top of the body of the candle, that's the closing price. Let's run through it again. Open, close, low, high. We'll go ahead and write them out because we'll be on the screen for a little while and you can take notes. All right. And let's remove that background there just so you can read this more easily. Wait, why is it in blue? I never use. Who's changing my stuff? Low price. Closing price. I'll put it right here. Let's go ahead and throw a opening price in here. And lastly, let's get a high price in here. Pretty basic stuff, right? Pretty easy stuff. If you didn't know this, no problem, because now you do. And I bet there's some people who are, I don't want to put these over the price. Yeah, as long as it's not distracting to you guys, you can still read that. I'm willing to bet that there are some people who've been trading for a little while that didn't know how to verbalize this. So I have those here. Let's compare it with this candle, this green one right here. So the stock, let's run through what happened that day. We can tell how the day went just by looking at it. We don't need to say whether or not the price was, it closed higher than it opened or not, because we see it's green. But let's try to understand this on a little bit deeper level. The stock opened here, which means we can reasonably deduce that it dipped first to the low price. That's the low price of the day. And then from there, the stock must have rallied, if you want to call it that, or had a price increase and reached a new high. Pretty cool. But could not hold that price and closed here. Let's do the next candle. Same thing. We know that this is the opening price, so this means that the stock made a move down in the pre-market or the after-hours session. And what did it do? It tested the low price again, or it had its own low price that it made for the day, and made a move up all day. Got a little higher and closed just a little bit down off of its highs. That is the anatomy of a green candle. When we say green candles, generally what people are referring to, or what I'm referring to, is just by the definition, the price closed higher than it opened. If you don't know that, you should write that down. Now, these are the very basics, but it still is important to understand these things this way because we're putting together a picture, an entire story. Okay? Now we have that now in the same frame, but without making it confusing. If you want, I'll put this back up on screen for a quick second. Actually, this doesn't have the highs and the lows on here. Interesting. We're gonna use, let's use this candle, right? This one's cool. Same things apply. We know the high and the low. Those are the exact same, but there's one difference, or two differences technically. This here, on a red candle, that's the opening price. The bottom of the body, well, you guessed it, that's the closing price. So let's go ahead and add that there. We got our opening price here at the top, which means, I mean, we can pretty much figure out how this day went for this. Hopefully this isn't too confusing for you guys, right? We can pretty much tell how the day went just by looking at that, right? And as you've probably already figured out, I'll put the closing here. This means that the stock, because the candle is red, closed lower than it opened. That's what made it a red day. Now, if you're brand new, some light bulbs probably just went off, and that's cool. There will be a lot more of that. We know the high and the low price. We don't have to jot those down. But let's talk about what happened that day. We don't even need to guess. I wouldn't even say assume. We know for a fact that the stock made its move up in the pre-market or after hour session. It opened here. They gave it a little push in the morning. That's why you get that wick. And they pushed it really low down here. And we're able to push this back up. That is where the price closed. Now, the next thing that I want to describe to you about these candles is the fact that the candle body itself, the price action, is really just to show you the opening and closing. However, there's a lot of information in the fact that these candles have wicks. It means that the price went there, but couldn't hold. That's literally all you need to know for right now. So let's scroll throughout the rest of this chart and kind of see what we can find. We're just going to do a quick run through. I'm going to talk about a few different candles and how the price worked, or how the price action moved that day. We don't want to remove all of them. Let's remove this text. Okay, so we're just going to do a quick run. That's it. All right, so price opened here, went to the high point, closed here, opened here, made a quick move below, high point, closed, moved up, tested a low, went to this high price, came down, closed right there, right? Gapped up, high price, low price, closed. Moved over the next day. Remember, you go to the high or to the opening, opened here, at a high, came down, closed. Move over one more. Same thing. As it moves over, there is a high price, but you can't see the wick that well. Same thing for the low, but open, close. As a matter of fact, we don't even need to do the highs and the lows right now. We'll do open and closing only. So we'll run through this exercise. It's just about repetition. We're going to start from here. Okay. So open, close, 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 right? That's that right there. When you're watching price action, you're watching candles movement, that is what is happening. That is why they are forming that way. So when you see a candle make a move up, right, it means that in the sequence, right, that you'll sometimes see the line when the candle is forming, when it's trying to decide what it's going to do. If it moves to this next candle and it made a move up on a daily chart, that's called gapping. It's a gap up technically. And remember, we're only using the basic terms here. There is another way we can identify gaps in a chart. That's not what we're talking about. But we are saying that in the time in between these candles forming, there was a little bit of price movement before. Now, this one technically didn't gap up. This is, you can see the wick, just not that well. but if I make the candles a little taller, you can see it, right? So you can see how this was the opening price down here, closed up here. This was the high, you just couldn't hold it. And the next day, it came back and tested. It didn't even test. It just had a little low that it made before having a nice day. So that's the only place that you need to start. The anatomy of those candles, understanding the highs and the lows, the opening prices and the closing prices. Now, I know someone out there is thinking about the after hours session. So in pre-market, from 4 a.m. Eastern till 9:29 Eastern. This is going to be a mess, but I'm going to click it anyway. There, you'll notice the wicks and the highs on some of these will be a little different. It'd be surprising if these didn't change too much. I guess they changed a little bit, right? You can see how the closing price that we had marked is a little different. So for the time being, just kind of stay away from that with your charting, right? We don't need to know about the open and low, or the high and the low prices in the after hours session. There is a lower amount of liquidity there, and generally stocks the next day when the market opens to everyone, they generally tend to erase those moves or invalidate them. Okay? Not always, but I don't think you need to focus there. We need to stay focused on just the basics. So now we've gotten the candle type or the candle anatomy down and where the highs and the lows can be found. I think that's a good exercise for you. Just start understanding the story behind how these candles moved. For example, if I were looking at these candles here, and let's say I'll start here, right? So we opened here, went to the low price first, then made its move up, went to that little high price, cool, and closed right there. In the overnight session or early morning session, it had a slight move up. This is the opening price, and it made a little high, just a slight high above the previous candle. And what happened? And apparently someone bought the dip here, and bam, closed right here. And as you can see, the selling continued, and that's terrible. That is not, if you're a bear, you love that. You love to see that. That does bring me to a point that you guys should already know, I think, which is bulls versus bears. So sometimes you'll hear me say something is bullish or bearish. Bulls, green candles. Bears, red candles. Bulls want price action to the upside. Bears want price action to the downside. So I think when you hear me describe how the story went for a chart, just so you understand, I'm using bulls and bears in that way. I think every stock should have a story, a way that you can understand how the price moved. I don't mean that in the sense that I need to know the news for that day or anything like that. No, that can be helpful. But I mean, you want to understand when something opened and closed, just so we can kind of get a good visual for how things are moving. Trust me, if you think of the candles just as candles, instead of people trading, institutions trading this price action, I think you'll have a tougher time, right? You want to shorten the learning curve here. And if you have any questions about this kind of stuff, of course, there's tons of research online, but feel free to reach out to someone who is more experienced as a trader. That's something I also want to make sure you guys always practice. Always ask. There's a ton of people who have the basics down, or who will at least have some of this stuff down, and they would be happy to give information to someone that is trying, someone that is working, that is trying to understand it. Okay. Now, we have these candles down. Let's talk about some of the candle types and names. That's what this is going to be good for. I know it says candlestick patterns, but some of these are patterns. But let's focus on the basics. You need to add these to your arsenal, add these to your vocabulary. So the first one, I'm going to say it's a hammer, and usually a bullish candle. As we expand, you will see that it is possible to have a bearish candle that looks a little similar. So I'm going to give you something to look out for to determine if something is bullish or not. Now remember, every time when you see these candles, it does not necessarily mean that the price is going to go the direction you think it will based on the candle. But we're only focused on identifying what they are, what they're called. The candle that you should be able to see first, and you see it everywhere throughout this chart, I mean, it's just everywhere. It's going to be the hammer candle, right? I'm sure you can identify it in many places. But I'm going to give you a pretty cool tool that TrendSpider has, which is the candle type, right? You can actually add, well, it won't be there. It'll be under candlestick patterns. So if I were to turn these on, these candlestick patterns on, it will identify whatever I have listed, right? So if I wanted to find hammer candles, so I'm gonna take the inverted hammers off and I'll just put hammer candle and I'll apply it, and I'll go here to candlestick patterns and I'll click there. And what this is gonna do, just if you're practicing it, and I guess I need to turn off some of these these other candles. Let's do, I can actually see some bullish engulfing, so I'll turn these off and see if we can just limit it to hammers only. Okay, cool. Well, it's got a couple of other candles here. What else do we have checked? Dragonfly dojis, we'll come back to that, but I want you to just be able to dial in on hammer candles only and the outside bar, yep. And shooting star. Okay. Now we should be able to find just hammer candles to pick out. The hammer candle is generally associated with bullish price action. It looks like this. It looks like a hammer. Looks like a hammer from Super Mario. The reason we want to be able to identify this candle maybe as a starter is because I feel like it stands out from the rest. You can easily see it. Generally, this means that the price action is bullish. And the way to think about that is if a candle begins like this, right? You see how a candle sometimes moves up and down. I know you've seen it before where it looks like the body of the candle can't decide if it's going to close down here or close up here, right? And the further it moves up, the wick becomes longer, right? It can end up looking like this candle or even like this one. So the way to think about it, we're going to write on our chart here. I like to think of bulls pushing price up. That's what I like about this candle. And in fact, I will go ahead and draw an arrow just in case that helps. Bulls are pushing the price up on this candle, right? And just like with any other candle, as I'm sure you've already figured out, bears pushing price down. Pretty easy stuff. Pretty easy stuff. Okay. Now, obviously, when you think about bulls and bears, or buyers and sellers, if you want to use that terminology as well, the bulls were pretty much in control here. That's what makes this hammer candle bullish. But there's something else about this that you should know. With this particular candle type, you notice how here it says that there's a candle that can be bearish that looks pretty similar, right? Now, me personally, I won't always use this terminology. For the time being, let's just focus as a bull, focus as if we were trading this to the upside. This is called a reversal candle. It signifies a reversal, but a reversal of what? A reversal of trend. If this is coming from a downtrend and you see this, this is generally pretty positive and would tell you that, well, the bulls are starting to win this battle in this candle. And if they maintain the momentum, the price can close higher, and maybe this reverses. Instead of this downtrend, this short downtrend, it should be able to make a move up, and make a move up it did. Now, of course, In an uptrend, when you see this candle, sometimes it means that the price action will come down, but I do not consider that something that we need to focus on right now. Learn this, see this everywhere, every chart. When you see this, pay attention to how the next candle plays out. And as we already know, this is the opening price. The opening price here is higher than the closing price here, which means that it worked exactly as we expected it to. Let's go back to telling the story of these candles. Opening price, close, gap up, which is pretty interesting. Gap up to here, open, here, open, close, open, close, open, close, open. Price went higher. Eventually closed down here though. That's a hammer candle. What I would like for you to do is to continue to work on practicing finding this setup in many places. So again, let's find another one. And you know what's funny is that TrendSpider did not even recognize this one, but this goes to show the importance of being able to identify these on your own. Maybe they have a little different criteria, but this is a hammer candle. This is a pattern. We won't get into that right now, but let's identify it. Right? We see we're coming from a downtrend that fits our criteria. We know it's a downtrend because we see multiple candles down in a row. You see the hammer candle. We know the price opened here. Even had a nice little move down. And bulls pushed it up. Close. That starts a short uptrend. Let's find another hammer candle. Now, of course, there's going to be some instances, like I said, where that doesn't play out that way. But I'd be willing to bet, yep, how did I know that that line was going to pop up when I clicked earnings? I know you see people trade around earnings. This is why you don't, because you had no idea. See how it just completely messed with the technical setup? Interesting. But we're not here to talk about fundamentals. We're here to talk about the technical side of things. So let's find another downtrend and hammer candle. Let's find one more. One more. Found one. Open price, close, open, close, move up. Once again, this hammer candle proves to be signaling the reversal. So as this is the daily chart, if this were making a move down here and you saw that hammer candle, right, there's going to be other things we're going to talk about, but you see that hammer candle, you should be on the lookout for potential price movement up. And the reason for that is because we can see from this candle that the bulls were indeed pushing the price up. They closed higher and they succeeded in getting a higher move. It's pretty solid. And it actually continues to trend up that way for several days. So now you have one candle type that you could focus on. We will talk about some other candle types. And one of them is actually going to be shooting star. You'll hear me refer to this candle as a shooter candle. Shooter candle is generally just the opposite, right? So let's find an uptrend and then find a shooter candle. I already saw one, but let's get one that's really clean that you can identify a little more easily. Oh, here we go. I see. Now I'm not looking for it. I find a bunch of hammer candles. Oh, here we go. Okay. And remember, you can use the, like we discussed before, you can use the TrendSpider's find feature. And the reason I don't have or didn't want to have pre-prepared examples because I want to kind of just give you guys the real experience on looking for these things to determine how applicable they are, right? How often you can utilize them, how often you can find them. And then you can understand that, I mean, this is pretty common. It's not magic. It just requires you observing the price action. And we'll actually just go to another stock real quick. So I want to find the exact candle. And we are on a daily chart. We could have gone into another time frame, which I'm okay with too. Let's go to the 30-minute chart. I see one, but I see one that's more of a doji. Oh, man, look at this. 30-minute time frame is a little strange. We'll even go into, and you're dealing with a lot of volatility. Let's go back into that. Let's use a 15-minute chart. You're actually getting to see on display right now why it's important not to force things on a chart, but observe what is actually in front of you. I see another one, but once again, I want to get you guys a textbook example here. So let's find an uptrend. There we go. Found it. Just so you can see that I'm actually recognizing these things and finding them in real time. Okay. Now, this one isn't going to be as dramatic of a candle as this one is. I say dramatic because not only are the bears not completely in control at this time, but it could be mistaken for the price action going elsewhere. But let's talk about just the anatomy of this particular candle. Like we said before with the hammer, right? You can look at this one and see we're coming from an uptrend. Not only that, you can see that the bears are pushing this price down. Let's talk about how this worked out. Open, close, open, get really high up there and can't hold that price, close. That signifies that the bears were starting to gain some momentum. Or I would say bears, yeah, we'll just say gaining momentum, right? Or gaining control. That's what this candle signifies. At least for this candle. And that momentum actually translates to the next day because we know from what we just learned that price opened pretty much laterally and got a little push, and look how weak that push was. And the rest of the day closed, and look what that started, a downtrend. But that brings us here, right? Bears did everything that they could. They got to a point where they lost control of the price, right? Get the move down, and bulls gain a little bit of control here, close here, and that leads us to a short uptrend. It's just a 15-minute chart. This is happening each candle 15 minutes at a time. But if you practice this and you spend as much time as you can learning or telling a story, right? Or at least telling the, how the events played out, you have a much better concept or a much better grasp of the concept of bulls and bears and how the candles look when one is in control or when control changes hands. So this is bulls gaining control. That's going to bring us to trends. You've heard me say trends here and there. I know one of the questions that I get often is, how do we correctly draw trend lines to identify what a trend is? So we're going to talk about that now. And of course, there are some other candles. As a matter of fact, before we do that, let me give you one more candle. And this one is going to be super easy to spot everywhere, right? A doji candle, but also not just any doji. This is called a spinning top. This is more doji than anything, but actually let's use this one. I like this one better. This candle right here, spinning top. You ever seen a top? You ever seen a spinning top, right? That. But a spinning top is it's a type of candle. And that is called indecision candle. An indecision candle is exactly what it sounds like. Too close to call. Bears or bulls. Sure, the price closed lower than it opened, but not by much. And you can see up here the opening and closing prices if you didn't already know that. Opening price 1102, closing price 1101. Not just that, 1101.99 and 1102.12. Like, that's very close, right? And that's why you get that kind of candle. Not only that, the high and the low were not very far from each other, and it closed very near to where it opened. The high of this candle was 1104.26. The low of the candle, 1100.23. So not much movement here at all. When you see this, Generally, it means, like, let's say we're coming out of a downtrend. I also like to think of this as a first signal or potential that whoever was in control is no longer in control, or maybe in danger of losing control. Okay. Now, we're not going to talk about any of the other things that I see on the chart right now. Those will be for future, whether it's in the group or in the morning calls, something like that. I will continue to address these things. I expand on them a lot, but I know we move kind of fast during the trading day. So we're going to stick to what we know and build on this as a foundation. Now let's talk about trend lines. Gotta love it. Now this is not even a beginner's thing, because I think many people can relate to the fact that you see different trend lines drawn in different places all the time. All the time. You'll see people have a certain trend. It's like, well, I don't know if I would agree with that trend line, right? But let's start with let's start with a clean chart. How about that? All right, so we got the daily chart here, and for Netflix, and I'm gonna go to the hourly chart actually. And the hourly chart is gonna have quite a bit of information. I'll keep those hammer candles highlighted. When we're defining a trend, what we're looking for, and I think you should write this down, it is going to be not only identifiable price action. You should be able to see the trend the more you practice, but you want to get as many candle touches as you can. If you're using Trend Spider, I would draw a segment instead of using the trend line feature or the draw trend line feature. Because what it'll do is it'll draw a line from here to infinity. That's not what we want to do. We just want to draw a quick segment. So I'm going to draw a quick downtrend, or a brief downtrend here, and we're going to talk about it. So usually, I want to get as many touches as I can to understand the trend at the time. Okay. Now I know we're downtrending because I have an apex that I'm looking for. Now, it doesn't always have to be the apex, but for the time being, I want to tell you what to look for to draw your own. Right? So this is a local apex. And when I say local, I'm referring to it being something that is in the recent area. So this is the highest spot. This is where I would say the trend sort of begins. Okay? Now, we know that we're in a downtrend, so I drew this down. But I'm trying to get as many touches as I can before the trend break. So the start of the trend and the end of the trend. So if I'm looking at this, I would say, okay, this is, at one point, this was the trend here, right? If this was the day we were on, this would be the trend. And anything above that trend would signify a trend break. Something else you should write down. Trend lines are all about identifying, not of course the trend of the price, but to give you a marker to see when that trend has been broken, just a visual marker. Sometimes stocks will respect trend lines, and many times they don't. And what does that tell you? It means that there's most likely a broader trend forming, or there's something else in the price action that you need to go and identify. Okay. So we have this short downtrend, and then of course it breaks, and we have more downside. So if I revisited this chart, I wouldn't just draw an additional line. I would readjust and say, okay, well, what is the new trend that's formed? Let's say I come back to this, okay? And I want to identify what is the newer trend. Now remember, some of technical analysis is going to be more of, you're going to get different people that see different things. What I like to look for though is the high of each candle. See how many of those I can get to touch this trend line. So we got 1, we got 2 touches. We even have 3, 4, and bam. I like this one. This is how I would draw this downtrend. Now, of course, you see that the high was a little bit taller there. You don't need to focus so much on having each one be perfect. Let's see what happens if I were to do that. That would technically also be correct. But I would be a little late to the trend break because I gave up 2 candle touches for 1. Okay. So it really just depends on what your purpose is and what you're seeing. I like this one just a little bit better, just a tad bit better, right? Because the candle still closed underneath it. And when the trend is actually broken and trading sideways, trend starts to reverse or starts to change. So this trend break is clean. And I don't draw my lines all the way down, right? You see people do that. That's not my style. But if this is where the trend actually breaks, this is not bad. If I were to draw it this way, not much different. Still a little late. Okay, so let's draw another one. Here's another pretty crazy downtrend. And one thing you should know is that the way the market has been recently, you've actually gotten a lot of crazy moves. Now, this is just an hourly chart. Let's move over to the 4-hour chart so we can kind of see what I mean by that. So you see how if I were to take a trend line here and draw from, let's say, here to here, that's the exact same thing we just looked at, just on a larger time frame. The exact same thing. And once that trend breaks, amazing. We actually got a hammer candle. We talked about what a hammer candle can be. And it's officially over the trend line because it closed over the trend line. I think that's super important that you write down. I don't mean it touches, it needs to close above it. And we already know what opening and closing prices of these candles are now, right? Let's go draw some more. And let's go get a stock that wasn't completely beat up. So we can actually, oh boy, now look at that chart. That has way too much information on it. NVIDIA, we know that this stock is uptrending. So, or was uptrending. Let's draw some downtrends and let's draw some uptrends. Okay. So downtrends. And feel comfortable just drawing the line first, right? And then going in and adjusting it. That's okay. So let's get a quick downtrend. So we talked about like maybe the high point of a move. This isn't the high point. I feel like this would be the apex of the downtrend. This is where it all started. Okay. This is where it all went wrong. And if I were to draw a trend on the daily here, I don't even think I wouldn't pay so much attention to this just because I feel like there are far more relevant and easily identifiable trends. This will actually be the apex of that. Right, so this isn't a very strong downtrend. It's just a little brief one, but you notice that once it actually breaks above or closes above, it starts to trade sideways and then uptrend. I'm only saying it this way because we're still talking about being an absolute beginner at this. I want you to feel comfortable going in and what to look for. Sometimes the trend just simply isn't there. I want you to also remember that. And yes, it's okay to have some candles above the trend line or the wicks above the highs and the low prices, but you want to get them to at least have several points of confluence, or several points where they touch. So as we said, we can try to move the candles and see how many touches we get. And the invalidation, or the thing that would make this trend line wrong, would be the closing prices. If you look at this visually, you can see, some people would say, well, this candle's above it. Well, where did the price close? We kind of already talked about this many times today, but you see it opened here and closed down here. It actually closed below this price. Sometimes you're going to have the low price, the high price of candles, the close and the open, all a part of the trend. A lot of this has to do with the stocks and the volatility that we're seeing right now. And generally, I wouldn't draw a trend like that. In fact, I wouldn't even use that as part of the trend. Once these became available, I would say, okay, this is the most recent price action. This is the most recent trend. Okay, but it's not that helpful to me. And we're going to explain why here in a second, and you'll understand when it's appropriate to draw or when it's necessary to draw trend lines and when it isn't. You don't draw trend lines just because. There's no need for that. What we're looking for are breaks in the trend. So let's draw an uptrend. I can clearly see a shorter term uptrend here. And the same thing, I can identify several different points where the lows of the day touch the line. They all connect. This is an uptrend. Very easy, very simple. And of course, the cool thing is that if you get a lot of touches here, the uptrend will help you determine when the trend breaks, when the trend stops being an uptrend. And you can see right here, when it closes below that, it's gone for a little while. So let's actually annotate that. And let's go somewhere on the chart where we can get a very clear uptrend and downtrend. I think this is pretty cool, but I'm gonna get out of the daily chart because you usually find a lot of quicker trends on smaller time frames. There's just a lot of information. So, oh, here we go. We got quite a few. Oh man, look at that one. That is insane. Yeah, we'll use this. So uptrend. Now, granted, this is a massive uptrend. I mean, you don't even need a line for that one. We'll draw from here to here, just so it's, oh, actually, we'll keep this trend here. It's important to know what your objective is when you're charting, right? We have a pretty quick uptrend here. How do we know that? Well, we have the start of a pretty serious continuation. And before we had all of this up here to work with, we had this. Now, it wouldn't be very helpful because we can see that there's an uptrend. And of course, you see that magnet moving and hitting these lines. But what I'm most focused on, and this is a little more nuanced and a little more advanced, I'm focused on when there was some serious selling pressure. And you can see that it came down and it hit that trend line, actually. And I can use that line for the future if I wanted to, right? Because I can draw the line. I can bring it down here, for instance, and say, well, this is a broader trend. This is a bigger trend. The stock has started moving up a little bit more than it was when it was down here. So I have to adjust the line to connect these to try and determine when that trend is broken. And sure enough, the moment it actually does and it closes below, remember, not just touches, because this candle, as we discussed, closed above it. But when it breaks and closes below, okay, I know the trend has been broken. So when you say a trend break, that is what you should be referring to. And right after it, what does it do? Well, it makes a shorter downtrend. But let's find one that's a little easier to identify. Same thing. We're going to draw the trend line here. I think this is some important nuance or some important details that a lot of people do not have a good grasp on. The closing price of these candles. Closing price here. Okay, we have our new trend. Even though this touches above, right, at some point, 15-minute chart, closes here, still in trend, closes here, still in trend. Makes a quick little move up, sure, but fails to break above, and so it's still bearish, still in trend. The high point, pretty close to that trend line, nice, but closes below it, is still in a downtrend. Next candle over, opens here. What happens? It doesn't touch it and get rejected, it actually closes above. Now we have a trend break. Now the downtrend has been broken. Downtrend breaks can be great because, again, they signify that maybe the price is changing, maybe the control is changing. You got to pay attention to the time frame you're on, though, because if it's a 15-minute chart, that doesn't mean the trend for the day has changed. It could just be a short amount of time, right? So now we've got downtrends and uptrends. Let's go look at some daily charts real quick. We're going to talk about how how Netflix actually has had a very interesting time. Some names respect trend lines more than others. And there is no scientific reasoning for that. And I won't go into some of the more interesting points there, but I want to talk about how you can have a trend and even have days above the trend. So this is a massive uptrend, right? This is the daily chart, and you can see that there's a trend line here, and we're going to give a name to this. We haven't done that yet because I want you to stay focused. But when a stock can't break above something, that's called resistance, and we'll talk about that right after this. We know this is a trend line, and this is going to be trend line resistance. Bam. Easy. Why is it trend line resistance? Well, because look at it. The stock, look how many times it tried to break above this, right? From here. Now, we don't need to get these touches here because we have new information. You should also write that down. You can always adjust you should be adjusting your charts when you have new information, but I'm going to show you some real nice points to look for to determine if your trend line is valid or not. So this rejection here, okay, you see it, how many touches we get? 1, 2, 3. You could say 4 here, but the one that I'm really looking at is right here. Even when the stock broke above it temporarily on the daily chart, right? You see how there's the low price? Let me see how big I can make this. See that low price touches? Manages to hold the trend. Okay, when it breaks above, it holds the trend here. This is generally called a retest, but you don't need to focus on that right now. We'll talk about that maybe in future sessions or in the group. You guys have heard me talk about retests all the time. And that's exactly what happens. It makes its move up, Starting to look a little dicey here, right? We know that the bulls are in danger of losing this candle, and the next candle they actually do. What I think is so interesting about this one is the fact that the low price was here. It actually came down to that trend line, right? And the next day, look where it opened, and the bulls just simply could not keep this. Bam, crashes and closes below the trend line. And guess what? It took it quite some time, as you can see, to even come back and test that trend line again. One here, see that high price? Open, high price, rejection, close. Next day, or actually next day, low, high, close. Next day, this one's really great. Bam, they think we're ready to break through that trend line, and they test it. They try that trend line price, and nope, close. And it also sends them on another journey to consolidate, and we'll talk about what this little pattern is here. Some of you might already know it. And they try again. Look what happened. Rejection. Now the stock is still making moves up. There's nothing wrong with the fact that it can't close above this line, right? But the fact is, as the price action continues, we should keep that in mind, especially if the stock were, let's say, making a move up this direction and the trend line remains intact, right? We would want to keep this on watch for it to break through that trend line or not. Or let's say the stock had broken above here and it started making a move down. We want to be careful and see, hey, is it going to hold this trend line or is it going to break it? When stocks break above, or in this case, or in some cases, break below a trend line, the bulls on one side or the bears on the other side generally try to hold that trend line. They try to keep that line intact. Now, it's not the only thing that they're looking for. It's not the only signal. But for this, that's what you need to know. So now we know what a break of trend line resistance look like and a failure to hold the trend line support. And that is going to be our segue into support and resistance. So a break above this trend line resistance means that this line should hold as support. And guess what? That holds true for all support and resistance, all kinds of support and resistance on different stocks. We won't even look at Upstart today. No, let's go into something that has a different range. Oh, Apple, a stock that I do not like. First thing that you should be doing, know that when it comes to support and resistance, I do not use single lines. I like to use boxes. In some cases, those lines holding is important. Those prices, those single prices. But really what you want is a range to understand an area or a zone. An example is, you see how these three candles right here don't all have the same high price? It'd be pretty tough for me to say this candle is the resistance when we might be facing resistance here too. Or maybe one order gets filled and that makes the high price, right? I would want to know this whole area. So we're going to talk about support and resistance. We're going to go ahead and use the Apple chart, even though I don't like Apple, but it's okay. We're going to use the daily chart, and we're going to try to be as concise with this information while being precise as possible. You can jot down that I look at resistance as an area where a stock is no longer able to continue an uptrend. If a stock is uptrending, depending on what time frame you're looking at, if a stock is making a move up and it gets rejected, meaning that the price attempted to get through a particular area and it cannot hold that area and makes a move down, that's resistance. And as a matter of fact, I actually have a better stock for this because there's something that trades in this range. And I've used this as an example in the past, and I actually think it was, it might have been the weekly chart that we did. Sure was. I'm okay getting rid of all the annotations here. Come back and redraw all that stuff some other point. So if you were looking at this from a weekly chart, let's do the daily. Might be not enough information. There you go. So you're looking at this, you should be able to see some different areas here. The stock is uptrending pretty clearly, right? And where do you see it get rejected at? Well, quite a few spots, but One that stands out is here. So first we're gonna draw that just like that. And I like to use the boxes, kind of like as I was saying before. We'll actually go into the weekly chart and do this. Maybe too much information, just a little bit. And we'll use the most recent price action. So how are we identifying this? Again, high points on the chart, no matter what time frame you're looking at. High points on the chart that cannot hold or that stop the move higher. If the move itself does not continue uptrending, that is still resistance. It doesn't have to make a move down. Okay, the stock can make that move up, get rejected, and it can even hold that, right? I'll show you an example. Prior to these more recent highs, it traded in this range, right? Kind of stayed. I won't draw this box here. I'll keep this like that. Maybe I should make this a little bit taller for you. Yeah, there you go. So right here, we're going to start here, and we're only going to pay attention to just this little region. So the stock was making an uptrend. We know it was uptrending. We don't have to draw the lines, but if you were to draw the lines, you would see that it was in the process of uptrending, which is cool. And it gets, let's see, makes a move up here. This week, it made another move up. This week, it tries to get above this area, and this is the rejection. It actually has a down week. How do we know that? What we discussed earlier. Open, high price, bears gaining a little bit of that control and able to push it down here. That's pretty much all we need to know at that spot. Let's write it down. We'll say bears gain. Actually, instead of gain control, I'll even say bears defend the area. Right? Because when the price attempted to make its move into this area, the bear said, nope, don't think so, buddy. And they were able to push the price down. If this were a green candle with this, I would still say the bears defended the area, because that's why you get that wick. Either the bears defended the area or the bulls ran out of steam, however you want to view that. But I like to say that they defended the area. I was going to say bears gain ground, but bears defend the area. Okay. Now, with that rejection, this now becomes an area that I'm looking at, especially since it's the weekly chart, right? A larger time frame gives me a little more confidence in that area. This is how the week went. So this becomes resistance. It's a new area that the stock needs to break above. Now watch how many times this happens. If I were being very precise, I'm just going to draw a line segment. It's not going to be perfect. But let's say this was the closing price, right? Or the opening price, but let's pretend it was the closing price of this candle even. I mean, look how many times this absolute rejection happens. This is several weeks, by the way. Remember, we're on the weekly time frame. You notice how everything I said earlier is starting to tie in together, and there's a reason I'm explaining it in this order. Look how many times it fails to reach. This is a week where the opening price was here, and the bulls simply did not have the steam to make it happen. The next week, look where it opened at. This is pretty terrible, right? The week closes higher than it opened, but look where it opened. This is not great. They get a high price and they can't hold it. We know that there is some pretty serious bearish activity above this line. The next week, exact same thing. Next week, exact same thing, but this time the closing price is lower than the opening price. Remember, even if it's on a different time frame, the candles work the exact same way. But something great happens. Opening price of the week moves up through here, and it had days, of course, I'm assuming that where it closed above, but this week the closing price was above this line. Now, I'm going to give you a piece of information that if you're a beginner, maybe you don't use this phrase too often, or this phrase will not mean too much to you, but that became the pivot. It's a spot on the chart that's relevant to the price action. It's an important spot that the stock needs to break above. Okay, I'm not going to dive into that in this video, but we know that this is an important spot because look how many touches we get. Just like when getting several candle touches is important on a trend line, this is almost like a lateral trend because the high price hits the exact or pretty close to the same spot on a weekly chart. That is insane. Okay. Closes above it, and guess what happens when you close above a particular pivot? You get another shot at another pivot. So right now they're in this area, bulls and bears here, and they get to close above this trend line, or sorry, this if you want to call it lateral line again, which is great. But you're not out of the woods yet, buddy, because this very next candle, the next weekly candle, they try that again, and what happens? You get your little first sign here too. You see how this wick dips below, right back into this bull territory? The bears are able to give that little push, and the bulls somehow manage to defend. So that is another thing that we can add when we see these wicks to the downside. Bulls defend the area. That's what happens in this candle. You don't need to focus on that too much, but what's missing from this? See how many wicks we have? We are missing territory. I'll scroll out or zoom out just a little bit so it's easier to see. Bulls defend this area, right? When it makes a move down, you can actually see how the stock says, nope, I'm not going that far down, buddy. I'm staying right here. And when the bulls try to push this price up, the bears defend this area, and that's why it comes back down here. And actually, this is called trading in a range, but you don't need to focus on that right now. This is the range the stock essentially is stuck in on a weekly chart, or was stuck in. So this is resistance. This is support. If you're a bear, of course, this is resistance and this is support, but we're just focusing from a bull standpoint, okay? And I'll actually mark that on the chart for you. I've gotten the question before where others have asked, hey, how do you identify these two things? It's the same answer to the question about the trend lines. Multiple touches, as many as you can get. If you look at this chart, right, I'll have to zoom out just a little bit for you. Right there. Let's go ahead and hide this. It's taking up space on the chart or on the screen. I can see that, I mean, the stock has made multiple attempts to get through a particular area. If you really want it to be precise, I mean, let's say we're talking about just this range. Fine. I will move this here, right? Pretty easy. And the wicks get through, but not a single week does the price close in this box. This is bear territory at that point in time. And same thing here. Not once do the bears, or are any of these candles able to close in this area. Now, we'll actually bring it down here just for the sake of understanding it on a fundamental level. Right? Even the opening price of this day, right? Remember, the wick is fine. That's intraday, or intra-week, I mean. The wick can dip into this area. That's okay. But you notice that it closes up here. So this is support. This is resistance. So since we've talked about so much about support, I guess we should go ahead and define it, although I think you guys have already figured it out. When a stock is making a move down and it finds buyers, that's our support. A little tough to see on the weekly chart, but I wanted to use that example so that I could scroll out and you could see how it remains true on the daily chart as well, except for now we can be a bit more precise. Let's go ahead and draw this. Some of the comments I've gotten in the past are, hey man, you move and you draw things quickly when you explain stuff. I need you to slow it down. I hear you, random person on Twitter. I heard you, which is exactly why we're moving at this pace. Give you time to digest it. Now, this move up, this little uptrend here, which is pretty nice to see, it doesn't make it through this area. And funny how even here, that stays the resistance. Now we're only talking about zones just, for now. Of course, there's a way I could draw a particular line and come up with another pivot, an important spot. But for the time being, just get into the habit of going in and identifying uptrends and where the stock gets stopped, right? This is known as a rejection. I think you already knew that as well, but I would like for you to use the correct terminology. Get into the habit of saying the correct things. Okay. Bears defend the area. Gotta move this first. Bears defend the area. Pretty solid rejection. And then this candle here gives us the confirmation. We know that not only did it get rejected, but bears pretty much gained control here. So when we do this here, we have this little uptrend, same thing. Pretty quick rejection, move down. When we're going our uptrend from this spot, bulls defend the area. Takes a little while, but we go on an uptrend. Downtrend to this area, bulls defend the area. We go on an uptrend. Downtrend, technically, bulls defend this area. We make a move up. So you see how this range goes from bulls push price up, bears bring price down, bulls bring price up, bears bring price down, bulls bring the price up. Okay, that's the most basic way of identifying the price action. You want to see the trends, the stops, and the reversals. If you want a little challenge, when you're identifying the downtrends, since we've already learned about hammer candles, right? And we know that that is a potential reversal signal, reversal candle. Let's see if we can find that. We're going to start tying it all together. So we get the rejection from here and we start making a downtrend. Now remember, you're not always going to get a great line. You're not going to get the best line that you could have. But let's talk about those closing prices and how we would draw them, how we would identify them. Now this one's actually pretty great. This is nuanced. I want to tell you what my thought process on these. When this candle was available, or when this candle was here, right? Here's the start of the move. Even this candle, same thing, closes below the trend line. Look how this candle tries to break it. It even touches the trend line and it can't do it. The next day, it's an indecision candle, but bulls manage to close above. And the next day, what happens? They think they're making this move up, and I don't think so. The closing price of this candle is actually here, still below the trend line. Ain't that funny? That's why it's important to make sure you're drawing these things not only correctly, but have a good reason. Try to understand what the price action is. Look how you get another indecision candle or a spinning top or a doji. I mean, technically it's a doji candle. The high price, once again, touching the trend line, can't break above it. And when it finally does convincingly close above, and there's another factor here we're going to talk about next that's not there, but once that gets above convincingly, well, now you have an uptrend. Well, what is this? Not the greatest look, but it is a hammer candle. Okay. This is a better hammer candle. And it uptrends from there. Screen time is the best way to grow. It's the only way to grow at this. But if you know the right things to look for, just be patient. Spend your time looking at these charts. Understand what was happening, what was going on. So one more time. Uptrend. And I'm going to go through all of these now. Okay. Some of these candles are a little close, but just follow the cursor carefully. Move up. This is actually a point of resistance. And we're going to talk about what just happened, what I just drew there. But we're making our move up. Rejection. Move down. Bears cannot bring the price down, and bulls defend the area. Move up. Rejection. Bulls defend the area. Move up. Rejection. Bulls defend even higher here, right? Shorter term. I'll go ahead and remove these later so you don't get confused, but look at that. Rejection. The bulls have moved a little bit higher now. How funny is that? Still can't do it. Rejection. Bulls defend a higher spot. And finally, nice move through. And continue or make a new trend up. Do you think it's funny that the bulls were able to push the price higher here before making it move higher? Just think on that for a second. Something should be clicking now. See, in the middle of this happening, this back and forth between the two, eventually the bulls were able to defend a higher area, and that was what led this to a higher move, and finally a break through this resistance. But now I have something that you absolutely have to write down. If you're in the group or you are someone who, you already know this, you already know exactly what I'm about to say. Now, I'll go ahead and get rid of this. We don't need it. Oh, we'll keep it because I'm going to show you something else pretty cool. Write this down. Resistance becomes the new support. If a stock is battling this resistance area, resistance, right? And it finally breaks through and it closes above. The way we know this wasn't a fluke, just look below or look to the next candle or the next series of candles. Notice how the bulls defend or keep this area, right? They don't allow the price to go below here. So this is the new support. If you think I'm lying to you, look at the rejection, look at this move down, look at this next move down, and look at this wick. Insane. Is this earnings? It's gotta be. Maybe. Let's talk about the anatomy of that candle again. Opening price. Look at that push. Crazy low priced down here. And what do we say was support? Prior resistance, right? And it's gonna blow your mind. When this stock was making its move up, even though it didn't face a lot of resistance through here, and even if this wasn't a key area of resistance, it was support in the past. This was support, right? So we see support here. We know this is support now. We know that the bulls had to break through this level and build a base here. Isn't it funny how that also is true the further to the right we go? Have a look. Move down. They dip into bullish territory, bull territory. And that's exactly why bears can't close the price in this region, because there are buyers here, there are bulls here. Instead, the bulls actually push it back up here and close here. Not too bad. Eventually, the bulls run out of steam. That's fair, right? And they end up in this region. Again, they fight back because this is their territory still. And eventually, they lose the ground. They lose the area. And guess where we find buyers? Right back in our old area. Right back in our old area of support. Now, as we're making our moves up again, you will notice, we're going to talk about this going forward. Same thing. Same rejection, just simply not ready. And we start downtrending. Where are we going to find buyers, right? Where does this thing stop dropping, basically? Where does this thing stop falling in price? And, okay, we knew that this was support at one point. This was support even here, even though they couldn't hold it. They regained that ground, so we're dropping again. We don't hold here, but we find buyers here. And start a very nice short uptrend, and once again, reject it. So what you need to know is that prior resistance will become the new support, just the same way that the prior support, if a stock is downtrending, can become a new resistance area. We're going to see an example of that here in a second. So if we dive in even closer, when this was downtrending, remember how this used to be the support? We talked about that, building a base and making a move up. Well, when the bulls lose this ground like they did, just have a look. 1 day, couldn't hold it. 2 days, couldn't hold it. 3rd day, doesn't even get close. 4th day, can't get through it. It takes some time to break through that region again. This is what's so important about keeping an area of support and an area of resistance marked on your chart. The more touches you get in a zone, the more relevant it is to the chart. And if you can't identify it, it means that maybe you need to go into a different time frame. Now, this is the part that I like the most. You can see just from looking at it how many different spots there are. But one way I would recommend you try is actually, we don't even need to draw a new box. Watch this. I'm not gonna cheat. I'm gonna keep the lines from over here. I'm not gonna look. Watch. I'm just gonna move it across. What do you notice? Right? I don't even know what's on the other side or on the left side of the screen where we can't see. We just dragged it over. Funny how that resistance comes back into play. When the stock is trying to break above a new price here, look at that. Look how many times it rejects from this area. In fact, it actually has to make a very strong move to get through it. And when it downtrends, look where the price stops. Is your mind blown yet? But there's more. As the stock is moving up here, look how many times it tries to break through it and simply cannot do so. Even tries again here. Nope. Mind blown yet? No? Okay, cool. The stock attempts to make its move up here. Very nice. Very nice. And if you were to dive in to this stock even a little bit more, you would see it broke through and it tried to hold and nope. Get out of here. Remember, it's human psychology on a graph. So let's go ahead and draw some of these other areas of support. So same thing here. I'm just going to drag this one out and we can see how far this remains an important price. There's one here, excuse me, one here, one here. Okay. Here's one where it wasn't able to hold and it dips right into that key support. We know this is very important to the chart because look how long it's been in this range. Look how long it's defended this area. Definitely don't want to lose that. And we make our move out of it. Got it back now. Awesome. And we haven't seen those prices since. Fantastic if you're a bull. Let's do one more. We're going to take this box, the one that we already had. We know this was prior resistance from here, 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 here. A nice move up from that spot, right? I'm just going to, oops, we don't need that box anymore, but I'll bring it here. And I'm just going to drag this over, all right? That's all we're going to do is move this one over, see how relevant it is, or see how relevant it is. Very cool. Kind of a wide range, right? Definitely a little bit of a wider range than I would like. But as the price action is a little more recent, you're going to make those adjustments. So for this box, I mean, by the time we've moved over, you know, this is what, April 28th, right? Come on, this is several months ago. I'm going to identify this as support. In fact, I'm going to call this is what you should write down. This is going to be a key level. I'll just go ahead and mark that here. No, that's too small. We'll go ahead and do, I can change the font size on this. Nah. With a text. This is key level of support. Bam. That's what this box is. So as you look at the price, you can kind of see that for yourself, right? One dip into this area, cool. It holds here off a downtrend, nice. As it makes a downtrend here, same thing, finds buyers, awesome. Makes a move down, finds buyers. There you have it, that simple. And if you wanted to just draw some more, again, we want to have key levels of support, which means we don't want just one area, right? Like if the stock made its move here one time, we wouldn't say that's a key level of support. We want multiple areas where we can say with confidence, yep, there are buyers there. We're going to add an extra point to this. to get some confirmation, but we'll talk about that in a second. So the same thing goes, right? The rejection here becomes a new support. If the stock were to, let's say, break through this support here and needed to, attempt to make a move back up, guess what? It would have to work through this area now. You should be looking at all your charts now with that same mentality. How about this? Here's an area of resistance, right? See how I got rejected pretty hard? Cool. So I'm just going to go ahead and draw that. Funny how this area that it couldn't break above, right? This little ceiling. It was support at one point. Cool. Look at that. Even a little sneaky attempt to push the price down right here. Couldn't do it. Eventually, bam. Can't hold it. And that's funny because that's just where the stock is right now. Now, what if I took this line, I would move it back over to the other side? What would we see? You'd be surprised. Wow. Look at that. Look at the support on this day here. Wow. Look at that wick. I mean, again, it's about the ranges and being able to see an area where a stock shows you multiple times that price is important. We drag that line over from here or from somewhere around here. And like I said before, same thing. This was resistance at one point, moved down. We have a really good sense of the range or the ranges that this stock trades in. And what I'm going to introduce you to here, and I bet we'll see some points of confluence. And if you're not familiar with that phrase, you're definitely going to want to Google that. But we have multiple factors that come together to validate our thesis. And just for the sake of being thorough, these are all-time highs, but these are also areas of resistance now. Now watch this. The most important indicator that anyone can use, volume. When it comes to volume, this is going to tell you how many times the shares of this stock, or I should say, what the volume is of the shares traded. How many shares were traded back and forth. That's what volume is referring to. Now, another cool tool that I'm going to show you, which again, I don't know if you're going to use TrendSpider. If you do, it's going to be called volume by price. If you're not using volume by price, it might have another name on TradingView, which I don't remember what it's called, but I call it volume shelves. That's what they are. They're shelves that show, at least for TrendSpider, they show the shares held. You can also see where things were traded a lot. And you notice how this box here has the actual biggest shelf. So we know this as the key level of support. Funny how that works. I didn't even check this first. The higher you go up, right, the less a stock has been in that range, you're going to have less shares at those levels. And those volume shelves are going to be a lot lower or a lot smaller. 40 million, 67 million, 100 million, 100 million, right? This one being 200 million. So this is a key area of support. A stock breaks this, you better watch it back. Seriously. And below, right? Not a lot of shares held at these spots. And I mean, look how long the stock has been up here at this range or at these levels. Now, volume is absolutely critical. Once you have it on your chart, you should know, or if you have added them to your chart, or if you don't have them added to your chart, it should be at the bottom. You should always have volume there. It doesn't matter what time frame you are on. You should absolutely always have volume. I'm telling you, there is never a reason not to have it on your chart. Ever. And this is going to bring me to a really quick lesson on combining most of what we talked about today. When we see the lack of volume, you should understand that those moves generally are not going to give you a lot of price action. If you are a bull, especially, you want to find a lot of volume in your moves up. I'm just giving you reasons why, or the reason why I like to use it. When you get there, or when you have it, you will get what is called, or known as, confirmation. If you want to make sure that a move is for real, or that, let's say, the stock is moving up on lower volume, then it's not going to make a crazy move, right? That's what these bars are down here, right? See how this is a little bit lower? The blue line is average volume, but you don't have to pay attention to that right now. See how the stock is trading sideways right here on this 5-minute chart, right? Just a little sideways, not a crazy move up. But notice that when it gets, you see these three down here? Once it gets a lot of volume, bam, bang, bow. 1, 2, 3, right? This little increase in the volume in these three candles. 1, 2, 3. See how it made that move up? Very nice. And you notice that when the bears are in control, there's a pretty strong rejection from this area. And 1, 2, right? Like see these next two candles here? You should always be looking for that. I'll go to the daily chart. I'll show you the exact same thing, right? It doesn't matter. I mean, I'll go on the hourly chart. Same thing. Doesn't matter what time frame it is. Let's have a look. On days where, or times where the stock has a lot of volume, like usually off the open, I'm assuming this is the open or the start of the day. Yep, knew it. That's what that is. So right at the start of the day, most of the volume is in the morning. Look at that. It's able to get a quick move up. But you notice these next two candles, not as much volume. So that means you should be pretty careful, right? You should make sure that you're constantly watching that. If you ever see like let's say these two lower red candles here, right? Not a lot of volume there. Not a lot of momentum from the bears. That's what I like to call it. So not in danger, right? Even get a little push again from the bulls. Very nice. But when you see that next candle, this, even though it's off the open, that is a strong bearish amount of volume, right? That is strong bear volume. And guess what? Make a little move down and there are no green volume candles here. And look what happens. You get a little move, a little bit, but not much. So that's something you should always be aware of. And in the group, I talk about this far more in depth, but that's just a little information for you. And that brings me to trying to identify or tie all of this in together. Okay. Now, for the most part, you're going to need to spend time on what we've already learned individually, right? Like each individual piece that we've discussed today, you'll want to spend as much time as you can just mastering those concepts, right? Like even we're going to use the hourly chart because I mean we're already here. Just actually no, we want a little more information. Let's do the 10-minute. So let's say you are you want to day trade and you want to be able to identify some areas of support and resistance. Nothing too crazy. Cool. Watch how everything we've talked about today is still relevant. We're gonna go ahead and take this box here, and in the short term, I can see that this would be an area of resistance. Okay, cool. I'm gonna draw that box here. Cool. And I'm also gonna go ahead and take this box. And I see that as it was moving down, it found some buyers here. All right, sweet. 1, 2, nice. That's pretty solid. And I see here, there's also a bit of support, excuse me, a bit of support. So I'll actually do this. I'm comfortable saying that 1, 2, 3. These three areas that's decent support intraday. Maybe not to the whole chart, but for right now, it's cool. And if I were to draw that sideways a little bit, look, it was prior resistance. I'm comfortable saying that this is a nice area of support now. So as the stock makes its uptrend, cool, gets a little rejection there. Gotcha. Pretty sure that's the all-time high or near the all-time. So same thing. As I'm drawing this line here, I just dragged it across. You saw downtrend, found buyers. Nice, found buyers. So this support actually matters, actually holding. Of course, it's a 10-minute chart. On occasion, you can get some lower movements. That's no problem. It's fine. Same thing though. Ends up moving throughout it and finding more buyers. So this tells me that, sure, on occasion, if I'm looking on a larger time frame, like this is all I need right here. Because look, this goes back to November 12th. We're in December now. But once this area is broken, I should be on high alert. And I'll drag this down just to include it, but I'll zoom out a little bit more. And you can see how it's not so efficient to draw this and go that far back on this time frame. If it hasn't clicked already, this is why you want to go further out to other time frames, right? Like, what day is this for? We're in December, so we're at the recent spots. So if I were to just dive out just a little bit or zoom out just a little bit, oof, that's a lot of information. But this is where we are. Okay. And that line we just drew, yeah, that's this one right here. Okay. So the best thing you can do is we're going to go ahead and just declutter for a hot second. We know this is a key level. I would keep this on my chart and I would make sure that this is visible. If you can't make it visible on all time frames, like I'll get rid of this one and I'll keep that key level there, but I'll draw that now. Properties, original time frames, do all time frames. There you go. Key level of support. This is seen on all time frames now. And I want to know, as the stock is currently downtrending, where is it? Where does it have the potential to break below? Right? I want to know where it's going to bounce from, potentially. I don't want it to lose this level, sure. And I don't want to wait for it to come all the way down here because it may never see this level. So this is where some precision can be a little better. Now I could draw this right here, this box here. I could draw that level and say, this is a good spot, but it's not so precise, right? Depends on what my goal is. You should know what your goal is. Like I said, we're coming at it from the mind of a day trader and as a bull. So I'll go to the 90-minute chart and just try and see, look at that. There's that area we were going to draw, but now we can be a little more precise. Very cool. So we know there's a potential for it to hold here. And actually, I'll do this a different way. I want to show you one more way to do this. So we're going to go back to the daily chart. I'm going to take this box here and right there. Okay, so we're on the daily chart. I think there might be support here. As long as I make sure this is available or visible on all time frames, right? Yep, all time frames. This is the spot I'm looking for. I want to get a little more precise. So then I can dial in. This is called top-down technical analysis. We're starting at the top because we looked at the weekly chart first to even get here. And now we're on the 4-hour chart. We know that there is some potential support here. Awesome. Okay. And if we wanted to be even more precise, I don't think you need to be more precise than this, but it's okay. We'll go to the hourly. Now look at it. Perfect. We got a little confluence with the fact that this was support in the past. And we can draw this line here. And some more confluence with the fact that there's a volume shelf here, right? We know there's a lot of shares held at this spot, which can either act as an additional level to confirm support, or if it breaks below it, it can act as some pretty heavy resistance. For now, we have support there. That's what you should be looking for, right there. Now, you might remember that on if you were around on Friday, after that crazy selling, the market all of a sudden at the end of the day decided to do a little U-turn there. Okay, so I would pay very close attention to that, right? But we have all the criteria. We have our downtrend, we have our hammer candle, and we have the increase in volume near an area of support. Not a bad spot if I wanted to potentially take this trade to the upside. Now, there's a lot of other factors you got to pay attention to. I'm not telling you to take this trade, but I'm saying that you see how those pieces come together. Everything we've discussed today has its place. From there, I would say the other thing that we need to discuss, or the last thing that we're going to talk about before going into just a couple of patterns. This video is already an hour and a half. Unbelievable. I want to talk about consolidation, because we've talked about uptrends, we've talked about downtrends. We haven't talked about when the stock is moving sideways. And I know you guys have seen that and probably want to know, hey, what's that all about? So on a daily chart, let's see if we can identify some consolidation. Okay. I mean, I see it already, but I want to get you guys a real great example. Let's just go into a smaller time frame. We'll go into the 10-minute chart. I see consolidation all over the place. So consolidation, just to give you the simplest definition, is going to be when a stock is changing hands. Bulls and bears are trading it back and forth. It's just sideways. Right now, I think there's a little more nuance to this than I want to get into right now. But let's just try to identify it on or in multiple areas. And maybe we just go to the... Some stocks don't have very tight consolidation. Some of it is very volatile and seemingly all over the place. We want to kind of stay away from that while we're learning this stuff, while we're identifying it. But this is what you're looking for, right? See how no one has the advantage here? Not really. In fact, if I wanted to, I really could just do this and say that this is consolidation. It's a 5-minute chart, right? 5-minute time frame. But if I went to the 15-minute, like this, and I don't know if I made that visible on all time frames. Yep, I sure did. There you go. This is what you see most people use boxes for, so they can see consolidation on a chart. They kind of understand the range. But when you see a stock trading hands like that, it hasn't chosen a decision, or it hasn't made a decision, hasn't chosen a direction. So I think there's two ways that you should be looking at this, and we're going to explain that in the patterns I'm going to tell you about in a hot second. But you see this here, just burn that into your brain, right? Let's remember what that looks like. Okay, let's find another one. Same thing. There's a bit of consolidation here. It's cool. Just trading hands before the next move, right? Whether that's up or down. Let's find one more, just so that you are able to identify this more easily. Now remember, it is, oh, here's some really tight consolidation. Okay, this is what we're looking for. That was a little sloppier. Right there, oh yeah. Textbook consolidation, my friends. Just those candles alone. However, we don't know the direction, right? Well, how would we be able to take a position or know where it's going without other information? Well, if you ask that in your head, that is a very, very good question. And I'm going to give you an answer here in a second. So there's a couple of patterns that I think we should be aware of, and I'm going to show them to you. I'm going to give you 2 patterns that you can look for going forward. Let's identify the consolidation first before I tell you what the pattern is. If you already know this, you already know what I'm going to say. Good for you. Okay. Oh, there's a bunch of them. Okay. So here's some, this is a daily chart. Don't forget that, right? I think that's important to know. So, this is pretty dramatic. To be honest, this is like some dramatic price action. I want to get you guys like an absolute textbook look here. I'm not actually drawing that as the consolidation. I just want to, there you go. I want to be able to tell you what I'm looking for. And see if I can actually find a more, just something that's a little bit closer to the textbook. There's a reason I don't put graphics in these videos, simply because you guys ever been trading and you try to read what you have in a book, and what happens, right? You end up you don't see that exact look hardly ever, right? Almost never. There we go. So remember, it doesn't always have to be very tight consolidation. It can also, it can be, like even this, same thing. Doesn't have to be. It can just be simply the fact that the stock is trading hands or changing hands and has not made a very strong move. In fact, I can go to the weekly chart. This will be even easier. Oh yeah, there we go. We're gonna use the weekly chart for this. Just for the textbook example, which they always do. They always have like a very clean chart. This is consolidation. Now, some of you already know what I'm about to say. With this consolidation, let's actually find one more. We're going to use this. We're going to learn from that one, but I want to find one more. I see quite a few. Oh, there we go. I found some right here. Pretty chill. And actually, we don't even have to use that one. I wanted to find one that, and this stock's been uptrending for some time, man. Holy, pretty crazy. Yeah, we'll leave that one alone. We'll go to another time frame to find it. Remember the key when it comes to technical analysis, if it's not there, don't force it. Don't force yourself to see something that's not there. Happens all the time. People do it all the time. From a weekly chart though, this has been uptrending. So look at that. That's consolidation. Go ahead and put the text over that. Bam. Consolidation, stock trading hands. Now, how do we know where this is going next? All right, it's trading sideways. We see that it had a move up, right? It had a very strong week here. But how would we guess that? Like, how would we position ourselves to take a position? I mean, this is the perfect time to add a stock, right? No matter if you're short or long, which I guess I should explain. If you probably heard someone say this, if I'm long a stock, that means I'm a bull, right? It means that I am looking for the stock to go up in price. If I'm short a stock, I want the stock to go down in price. So how do we know where to take a position in an area of consolidation? Well, what you should know is all you do is look left. So this pattern here, this area, this is called a bull flag, which I think some of you already knew. This area is comprised of two different things. Number one, a strong move up with decent volume, with good volume, actually above average. This is called flagpole. Right? This part, this consolidation out of the flagpole, what's called the flag. That's what makes it a bull flag. If you're new here, did that blow your mind? If you're new to trading, interesting. What you should know about consolidation is that in the process of the stock trading hands like that, it will tend to make the move in the direction of the larger trend. And the larger trend, if we were to zoom out, is up. Plus, it's a bull flag. This is continuing out of this pattern. So move up, consolidation. Guess what you get with a bull flag? If you get enough volume, nice. Another flagpole. And what do you get after that? Consolidation. Not only do you get consolidation, what do you get after that? Wow, another move up. Pretty freaking cool. What do we talk about with these wicks? Bulls might be a little tired here, right? So you notice how this one doesn't consolidate quite. It's not as tight consolidation, right? See how this was just perfect, literally textbook. If I found a trading book and it had a bull flag in it, I could rip it out of the page and I could just take a screenshot of this. I'm telling you. But this flagpole kind of tells me that maybe not so strong, especially this wick here. But they do a little dip, and they get some more bulls here, and there you go. Got your hammer candle, and you make another move up. And this time, it takes us about 1, 2, 3. It takes 4 weeks. It takes a month to make that move up. Bulls are a little tired, okay? And as you can see, we are now ready. Oh, look at that. What do we talk about with the shooter candle? Uptrend, shooter candle, reversal. Wow, amazing. And if you really want to tie it all together, and if you believe that this is magic, where did the price stop at? Oh, just where it happened to have support in the past. Oh, wow. You mean to tell me that this was something I could have predicted? So that brings us back to the question I asked you at the beginning. Does history repeat itself? think you know the answer to that now. To some degree, absolutely. Not always, but it does increase the probability of what's going to happen, or us being able to understand what's going to happen next. Let's just identify a couple quick ones, right? Look at that. Flagging is technically a flag. I mean, it's a very strong uptrend, but it's a flag. And if I were to shorten this a little bit, you can see it. These are some crazy moves. 2017 was nuts. Seriously. Oh, look at that. Here's another one. Uptrending. Look at that. Shooter candle off of an uptrend. Reversal. Move down. Pretty cool. Pretty cool. Pretty cool. Again, moves up, moves up, moves up. As you can see, sometimes you're not going to get a very clear signal. It's just a weekly chart, but I find that very interesting that it's a weekly chart. What else did we talk about? Now, I'm going to ignore these candles here for the time being. I'm only going to focus on what we discussed, which is out of a downtrend, hammer candle, move up. Pretty cool. Now, we didn't talk about the other pattern. I want to talk about that. Okay. Unfortunately, Amazon is just so has had so much growth and success. Like, you don't even see any of those other setups or any of those other patterns too often. Lately, now you will, but okay, let's talk about another one. So this is consolidation, like we drew before, right? We know what a bull flag is, and the flagpole is up or bullish and consolidates and get a move up. Now we need to see what it looks like when you have this. This, on that hourly chart, is a bear flag. Flagpole, flag, and just got bailed out, just enough. But guess what? This is just on the hourly chart. And on the hourly chart, what do you notice? It downtrends from there. This is a bearish pattern. If you are in a stock and you are a bull and you see this, I'm not telling you what to do. I'm just telling you better watch your back. That's going to save a lot of you. As a matter of fact, I came all the way up to this spot and I didn't even see this one. Here's some more consolidation. It's not great, right? It's just the hourly chart. It's okay. But this is a bear flag. A lot of volatility, right? Not a lot of volume in the consolidation area. That's fine. But you get that move down. You get some consolidation here, even though I would have liked for these two to be a little lower in their high prices. And what do you get? A breakdown. I'm going to show you something that I bet some of you were in you had a bear flag. You didn't know what you're looking at. And you were in a stock that went down in price. I'm going to show you how you could have avoided that. Let's see, we had a flag break on, was it Roku? I don't remember. No, wait, wasn't Roku. Could have been Microsoft on Friday. Oh boy. Sure was. In fact, there's a bunch of them. We don't need to do the hourly chart, but let's find a textbook one. Look at that. Absolutely amazing. So not only do we get a bear flag here, right? So flagpole, there's the hourly chart. So you're going to have these disjointed, but this is one pretty strong move down. Consolidation, not even really consolidation. It is, but it's not, it doesn't look textbook like what we saw before, but essentially that's what's happening. If it trades sideways out of this massive move down, this flagpole, guess what you get? Continuation to the downside. Bye. See you later. Now, this is where it's going to look like sorcery. Okay, I'm going to mark this spot. I'm going to place here. Let's make sure that's it's visible on all time frames. Cool. I'm going to go out to this 2-hour chart. Here is the spot we need to be looking for. Okay, cool. Got it. And let's dive out to this 4-hour here. Okay, cool. We got the 4-hour chart, and let's look at this daily, and we marked here. Got it. Daily chart for Microsoft. Now there's other patterns involved here. Okay, I should have left that there, right? I want you to see this now. I'm gonna go to this 2-hour chart, and what do you notice? Move down, consolidation, move down. Wow. How about another one? Even in this move down and consolidation, which should have been a quick, nice bear flag, we know we had a market rally, and that's fine. But guess what? It couldn't maintain its gains, and it put in another bear flag. That's exactly what this is. It takes 2 candles to give us a real nice flagpole. That's fine. But look at that. Flagpole, down. Flagpole, little rally at the end of the day. Not quite convinced. But another thing I think should be noted, and you're going to get tired of me saying this, or you're probably tired of me saying it by now. This was a nice area of support, but you should have already known that. Now, the reason it's important to know the patterns as well as knowing where your areas of support are, because even with this supposed or this support that we're supposed to have, this pattern, right? I mean, the broader market was selling off. What I mean by that is the market as a whole, right? Completely, incredibly bearish this day. And it broke that area of support. So it's not a guarantee that it will hold there, but we knew the likelihood. We know that it should have held there. And the fact that it didn't tells us that, well, maybe now it's time to switch our thesis about this stock. Maybe instead of buying here, I should wait for confirmation of it holding this area, or maybe I should wait for it to break above and hold this area, because this was the prior support, and we know that prior support becomes the new resistance. So it's likely that we're going to find resistance at this level. This also means that when you're preparing to put stops in place, etc., you should find areas of support and not just have stop losses at random places. They should be near areas of support. Look at that bear flag again, just amazing. Just absolutely amazing what can be done technically. And even when a pattern doesn't play out the way that you think it will, funny how if we were just to zoom out on that 4-hour time frame, right? In the long term, it remained bearish. In fact, even this move up, if you had looked at the 4-hour chart, you would have seen, like, hey, buddy, this is forming a shooter candle, shooting star on the 4-hour chart. That's going to give us more downside, a bear flag downside. And even if, you know, Friday was an okay day, or the last day was an okay day, I don't know. This is not the best spot. You need to find some confirmation. That's a more complex thing to talk about, but you can understand why you're not out of the woods yet when you start to look at these charts, right? On this downward move. Last thing, or the last time I'll say this, pretty simple. This was very solid support. It held here on the daily chart. This is why the stock, even when it was selling off, came down here and found buyers. This is why the bears could not push it too far. The bulls were able to bring it back up. Okay. And we're at 2 hours. I think it's a good place to start. I think if you build around this, you'll be in good shape. A couple other things I want to mention, since I didn't get a chance to say that or say this throughout the video, because I don't want, like, if I'm a beginner, I don't want to focus on things that are not helpful to me. I do not think moving averages are something that you should be focusing on right now, but I will give you the absolute bare minimum of what I would use, okay, or what I use on occasion. Moving averages will tell you the simple moving averages, I should say, are different from exponential moving averages. So SMAs, also known as MAs, are different from EMAs. EMAs are going to factor in the most recent price action. Okay, so it's more weighted that way. Whereas SMAs are going to include the entire life of the stock. So on the daily chart, Very important that you're on the correct time frame. The daily chart, on occasion, I will use the 200 SMA. Over the last 200 days, this will tell you the average price of the stock. And as you can see, Microsoft is outperforming the 200 SMA. That's just insane. By a considerable amount. I mean, I know we're in a crazy, recently it's been a little tough for some people, but we didn't have that big of a drop. You see how big of a deal everyone made the last few days? What are you talking about? Like, look where we came from. Just zoom out, buddy. Relax. Okay. So over the last 200 days, look how far we're trading. And the SMA here, if you look at this line, that's where that is. If I click right here, or I don't have to click, 277.91 is the average price over the last 200 days, and we're trading at 323. Pretty strong. And the other one that I might use on occasion, and you'll see people use this for a more recent price action also, is the 50. And you know that with the 50, it's over the last 50 days. So if something's been on an uptrend more recently, then the 50 is going to be closer than the 200, of course. The 50, of course, will also be above the 200. But what you should know about these are that they are lagging indicators. It means that the price has to do its thing first before this makes a move. So you can't use this to predict what's going to happen. The same way you'll see people drawing charts saying, oh, it's going to go down and tag the 50 SMA. Like, okay, sure. Like, that's not what's happening. What is actually happening is that this line is moving in the direction that the stock is. So it can be helpful, sure. The only code that I'll give you, or the only cheat I'll give you, two things. If a moving average on a lower number, like 50, is higher than the larger numbers, right? I mean, it's above, or has crossed above. That means short term, it's performing in an uptrend. It's trending higher for now. If the 50 SMA were to cross below the 200, that means it is underperforming in that time frame, right? Short term has taken a turn for the worst, basically. If you want to find some SMAs, just for the for the sake of showing you what that looks like, hourly chart, you can see that the 50 is getting ready to cross over the 200. So over the last 50 hours, compared to the last 200 hours, right? This is essentially where we are. We are in danger of this one crossing over this one. However, this isn't very relevant or helpful in my mind, but you can see how if we were to go back that many days, there's no line, right? I'm just not a big fan of, there you go, you gotta scroll back further. This crossed in the past. I don't think this is relevant, and I would only use these on the daily chart. Daily chart only. I highly recommend that for you guys. Now, as I've said many times before, you can use different strategies, different approaches. You don't have to take my approach, but this is how I trade. I almost never use these. I can't tell you the last time I had this in my strategy whatsoever. The other tip that I'll give you is that on the daily chart, stocks tend to bounce from the 200 SMA on occasion. Like if something's downtrend, like I don't think I'll find anything like that except for, oh, well, there you go. DraftKings, I know that one was there. A lot of these stocks, especially in this market, have been making a crazy move. Oh, look at that. Well, what do you know, Amazon? Right at, I mean, it came down and tested the 200. Amazing. But you see how other times it broke below it also? My advice, stick to supply and demand. If you're just curious and you just can't help yourself and you want to know what EMAs I use, sometimes I use the 9, the 21, and the 50 just to see if the 9 is underperforming the 21. I usually use those intraday if I have to use them. I have not had to use those. I have not used those in, once again, it's been several months. And the only reason I ever used them this year was because in my group when I'm teaching, I wanted to be able to give everyone something that they could, recognize and possibly add to their arsenal. My closing remarks on this: never underestimate the power of peer review. Never underestimate community in trading. You want to get somewhere where others can see what it is that you're doing and give you feedback, and you can help each other. That sense of community is great in almost anything, but definitely in trading. I did forget to show you one more thing. Whoops. Amazon 5-minute chart. I use this all the time. I have this on at all times on your chart. I'm about to give you some information that just thank me later, okay? VWAP. My friends, listen right now. Volume weighted average price. You need to have it. Once again, VWAP. Here's my say VWAP, slap them. VWAP. Volume weighted average price. It begins at the start of the day. That's when it's recalculated. Okay. You need to know this. It begins there, and it will tell you the average price with regards to volume. Don't worry about getting your head around that part. Just understand you should have it on your chart, especially on the 5-minute. If you are tracking things on the 5-minute chart, you will notice stocks have a tendency to either reject from VWAP or use it as support. You're welcome. You got to have that. In the group, I'm sure I've elaborated on it. In the morning calls, it is always on my chart. Matter of fact, I haven't even shown you guys since I'm here. On the morning calls, I'm telling you, dude, listen, I always have that up. Weeble's about to get some free promo, and they're probably gonna say something like, "Hey, you wanna update?" They always talking about updating. And every time I reopen it, it never has the stocks that I that I left with, and I always have to put my indicators back up. Thanks a lot. But yeah, wow, it was a pretty insane day, huh? Wait, why is it not? Oh, it's VIX. No wonder. VWAP, bam. I'm telling you, you gotta have it. You absolutely have to. Oh, there it is. Install now. No thanks. I'll do it later. Got a little love-hate relationship with Weeble, man. You gotta have that on your chart. I just wanted you to know that. That's pretty much it. As far as books that you can use as a follow-up, of course, Charting and Technical Analysis by Fred McAllen. I said that in the roadmap. And you can also use Volume Price Analysis by Ann Cooling. I don't consider those to be beginner books. Well, the Charting and Technical Analysis can be helpful. But start here. Like I said, if you want to join the group, or if you want to, just grow, find somewhere where you can learn from others who are experienced at this. I don't know that I'll do a part 2. There's so much I couldn't cover, so much information. But hopefully this gives you a little bit of confidence. And if you're watching this and you never heard of me and you found me out of nowhere, link is in the description, or all my links are in the description of this video. But I'm a teacher by heart, man. I'm always teaching. Trade every day, teach even more than that. I trade each weekday most of the time, but I'm teaching 6 days a week for even longer than I'm trading. Hope this video has helped you guys. I have more videos in the group, and I'll be doing more courses. I teach private lessons. I love what I do. All you gotta do is contact me somehow. We'll find a way to help you out. This was an extremely long video, and I went the whole video without spazzing, without swearing. I deserve an award. It's time for dinner. Later, guys. Trade smart. Peace.